Hey, what's up guys? Hope you guys are having a great week. In this episode, I want to break down BigCommerce, a software e-commerce platform that's going up against the likes of Shopify. Now, BigCommerce went public in August of 2020, in the midst of the pandemic. And the timing seemed perfect, as the e-commerce business has seen a huge acceleration due to staying at home, as well as there's a lot of positive optimism within the space. The company's shares started trading significantly higher than its listing price of $24, as it finished the day around $72. A few weeks later, the stock price reached an all-time high of around $140, which is over 400% than its listing price. But ever since late August, the stock has been downtrending pretty significantly, and the stock is currently trading at a price of $45. Now, there's a lot of hype built into the stock, as a lot of investors heralded it as the next Shopify, which seen a huge acceleration in their business and is currently trading over a $100 billion market cap. The recent downtrend in BigC stock price was further accelerated by market pressure, which many different tech stocks experienced due to rising yields and fear of inflation. However, with the stock trading around a $3 billion market cap and seeing an uptick in accelerating revenue, BigC does look like a pretty good play here. So in this episode, I'm going to be taking a deep dive into BigC, explaining what the company is all about, breaking down their financials, and explaining whether or not it could be a good investment right now. BigCommerce mission is to enable businesses of all sizes to move their businesses online through their SaaS e-commerce solutions. It enables creation of online stores for both their customers' branded e-commerce stores, as well as their cross-channel connections to regular online marketplaces, social networks, and offline point-of-sale systems. The company generates revenue from two sources. One, subscription solutions, primarily platform subscription fees charged per online store for both enterprise and retail plans. Two is partner and service revenue. This includes revenue from their technology application ecosystem as merchants integrate into their marketplace. The company powers around 60,000 online stores across different industries in approximately 120 countries. While it does not report the number of total customers on a general basis since going public, it does report the number of accounts with over $2,000 in annual contract value, or ACV. Its customer base spans across multiple industries like food, consumer electronics, clothing, and many more. Customers include Ben & Jerry's, Skullcandy, Sony, Toyota, and includes small to large-sized businesses across multiple different regions. Recently announced partnerships include integrations with PayPal's iZettle and Klarna. The company also announced a partnership with Walmart that is intended to enable easier access for sellers to grow their online business onto the Walmart marketplace. Now, this partnership will enable its eligible US merchants to sell products directly on the Walmart marketplace, giving them access to more than 120 million unique customers visiting the Walmart.com each month. The partnership with an industry leader like Walmart is a positive development and is likely to enable BigCommerce clients to access one of the largest and fastest growing online marketplaces and to expand their e-commerce footprint. The Walmart partnership should ideally give BigCommerce a significant sales boost in the upcoming quarters. However, we're just going to have to wait to see how that plays out. As for the recent financials, fourth quarter and full year 2020 financial highlights for BigCommerce included a continued acceleration in revenue growth, reaching 39% growth to $43.1 million and 36% growth for fiscal year 2020, reaching $152 million. That's a significant acceleration compared to the lackluster revenue growth in the low 20s for the entire year of 2019. Some additional highlights in the most recent quarter include total annual revenue run rate, or ARR, of $181 million, which is up 41% from the year ago prior. Enterprise ARR was $100 million, which is up 51% compared to the year prior. ARR has more than doubled over the past 2 years, which confirms the broad-based acceleration in growth across the business, especially from their enterprise segment. The share in total ARR from the enterprise segment compared to retail accounts reached 56%, which was up from 52% from the year ago prior. Now, this is really important since enterprise segments carry higher margins and longer-term value of contracts. Now, as for the profitability, the gross profit for Q4 2020 was $33 million, which represented a 77% share of total revenue, largely unchanged versus prior quarters. The full year 2020 gross profit reached $119 million, reflecting a year-on-year growth of 40%. Operating expenses as a percentage of revenue declined markedly versus prior years, resulting in an improved operating margin of negative 18% compared to negative 34% and negative 39% in 2019 and 2018, respectively. This improvement shows that the investments the company is taking to increase penetration into the enterprise segment is gaining traction and may drive longer-term growth and profitability. Still, the company is far from being profitable yet, as operating loss increased to negative $13.8 million in Q4 2020 compared to negative $9.8 million in the fourth quarter of 2019. In Q4 2020, their net loss was negative $14 million compared to negative $10 million. For the full year 2020, operating loss and net loss came in at negative $38 million and negative $37 million. The year-on-year improvement in operating expenses, gross profit, and non-GAAP net income seem to be supported by the continued scaling of the higher enterprise business segment and increased focus on merchants with higher revenue plans, which in turn also positively impacts the customer retention rates, as evidenced by the most recent figures. NRR, or net retention rate, for accounts greater than $2,000 in annual contract value was 113%, which is up from 106% from last year. BigCommerce also highlights the following key financial metrics, so it should be worth to also take a quick look here. Accounts with over $2,000 in ACV as a percent of annual revenue run rate reached 82% in the most recent quarter. Average revenue per account over $2,000 in ACV was $14,600, which is up 32% compared to the fourth quarter of last year, representing the highest growth rate ever since Q1 of 2019. Lastly, accounts with greater than $2,000 in ACV reached 10,180, up from 12% compared to the fourth quarter of last year, again representing the highest growth since Q1 of last year. The financial outlook for the first quarter of 2021 calls for revenue between $41 million and $42 million, implying 27% growth over Q1 2020 at the midpoint, while for the full year 2021 total revenue was expected between $190 million, implying 25% growth at the midpoint of the range. With all that being said, it seems like BigCommerce has put in a great effort to accelerate its revenue growth rates and profitability targets. However, growth rates trail far behind its largest competitor, which is Shopify, as evidenced by the following comparisons. Now, Shopify's revenue in the fourth quarter of 2020 reached almost $1 billion, growing at a 94% rate. Total ARR increased by 41% for BigCommerce, while Shopify reported a 53% growth rate. And most importantly, Shopify is profitable at a large scale with operating income in Q4 reaching $112 million and net income of $124 million, which is compared to double-digit million losses for BigCommerce. Shopify generated almost as much as net income in one quarter as BigCommerce did in revenue for the full year of 2020. So in summary, BigCommerce is showing a promising acceleration of its growth across all metrics, but any comparison with Shopify shows that this uptake should be looked at with some caution. Nearly all metrics do favor the large competitor on a relative basis, and Shopify is growing its business from a much larger base, making it the clear frontrunner. As for valuations, BigCommerce currently carries a market cap around $3.3 billion, which is a fraction of Shopify's current market cap, around $130 billion. From a price to sales perspective, BigCommerce currently has a lower valuation, but that's largely expected due to the lower growth rates and much smaller scale. Even at significantly lower implied revenue growth rates for Shopify in 2021 compared to its exceptional 2020 performance, Shopify is expected to grow at twice the growth rate of BigCommerce in 2021. Most notably, this growth comes from a revenue base that's almost 12 times as large as BigCommerce's revenue. Shopify therefore trades at a premium versus BigCommerce for good reason, and Shopify is likely to outgrow BigCommerce in the future. Nevertheless, both companies are likely to benefit from the continued adoption of e-commerce, as both are growing the revenues above the industry average for B2B and B2C digital commerce applications. If these trends continue, I believe it's safe to assume that both companies have further room to grow into their valuations. In terms of risks, the much smaller scale and cash resources for BigCommerce clearly constitute a larger risk. While Shopify has $3.4 billion in cash and cash equivalents, BigCommerce only has cash and cash equivalents of around 220 million. BigCommerce is much more likely to need further cash injections via equity offerings, especially in light of its still unprofitable operations and continued cash burn. On the other side, Shopify shows that it can generate positive free cash flow and net income on a large scale. A general risk is that the recent pressure on high-growth tech stocks like BigCommerce and Shopify, due to fears of inflation and continued rate increases, put further pressure on the sector in general. This could certainly lead to further declines and multiple contraction moving forward. BigCommerce and Shopify are both great companies operating at very different scale and business maturity. BigCommerce is a very distant number 2 in terms of every metric. However, the global e-commerce market is massive enough for both players to succeed. BigCommerce may be an attractive acquisition candidate for any company looking to compete with Shopify. And Shopify, on the other hand, has proven that it can grow its business from a very large scale without the need to inject much capital. BigCommerce has an opportunity to build and become a leader in the enterprise merchant business. The enterprise business relates to large corporate clients that want to move their business online and play in the growing e-commerce market as consumer preferences have shifted in favor of online shopping. The firm is witnessing growing interest of enterprise clients to build their online presence. Annual recurring revenues from enterprise merchants have more than doubled in the last 2 years. Now, as for some of the risks and challenges, the biggest challenge for BigCommerce is to lead the SaaS platform to profitability. Like a lot of other tech companies, BigCommerce continues to report large operating losses even on accelerating revenue growth. But the trend goes in the right direction nevertheless. BigCommerce halved its negative operating margin from negative 39% to negative 18% in the last 2 years, and continuous improvement can be expected as more merchants are onboarded to the platform. E-commerce is booming and will continue to grow fast, so market risks are pretty low. But there is still a lot of execution risk involved here, as the point of profitability is still 2 or maybe 3 years ahead. There is also a longer-term risk that enterprise clients desire to bring their merchant solutions in-house to lower costs and exercise more control. So could BigCommerce become the next Shopify? BigCommerce and Shopify are operating in the same niche in the same market, but the firms are not perfectly comparable. Ironically, Shopify's strong market position with smaller merchants could push BigCommerce into adopting more an enterprise-focused SaaS platform, while Shopify will likely remain the leader in the non-enterprise segment. Independent of how BigCommerce is cornering the enterprise market, the stock has been treated very harshly lately and is now trading lower than 70% below its all-time high. Since BigCommerce still doesn't turn profit, the best valuation metric for the firm is the price-to-sales ratio, which has decreased substantially in the year as highly valued tech and software stocks plummeted. Shopify, with its larger platform and greater adoption, has a much higher price-to-sales ratio than BigCommerce, but has always demanded a large price of sales, as management has always done well in scaling the business. If BigCommerce was valued at 20 times sales, the stock would be trading closer to $70, creating an opportunity upside of around 40 to 50%. Now, BigCommerce's revenue growth has accelerated during the pandemic, and the firm is onboarding more merchants while losses are narrowing. We should see BigCommerce move into profitability later in 2023 or 2024, if not sooner. You can see BigCommerce as a smaller version of Shopify that operates in the same fast-growing, highly scalable market, but one that has a lower valuation, slower growth rates, and unprofitability compared to its bigger brother. I believe the biggest thing with BigCommerce is that for the past 3 years, they've seen sequential accelerating revenue growth. And as long as BigCommerce is able to continue growing its top line and better manage its operational expenses, I believe BigCommerce can eventually grow and take advantage of this accelerated global e-commerce market. BigCommerce most likely will not grow into $100 billion market cap. However, I don't believe that's what BigCommerce is focusing on. BigCommerce is focusing on the larger, more established enterprise businesses, and as the e-commerce industry continues to grow, I believe there's going to be a lot more demand for a more advanced e-commerce platform, and that's where BigCommerce comes in. So that, guys, thanks as always for sticking around. If you guys enjoyed this content, don't forget to hit that subscribe button to make sure that you keep up to date with the latest content. Thanks as always, I'll see you in the next one, and let's go get that bag.